Good morning and welcome to the 9-month financials for Biocon. For this quarter, our revenues stood at 779 crores, EBITDA at 170 crores and PAT at 91 crores. And in terms of our revenue growth, I would like to say that this registers at 9% group growth in terms of revenue, which has basically seen stronger performance than previous quarters. This growth has largely been bolstered by a very strong performance by our research services business, which has registered a 20% revenue growth this quarter. The business overall is in good shape. I would say that whilst PAT is at 91 crores, this has to be viewed in context with one of the highest R&D spends we've seen in any quarter. At a P&L level, our R&D spends are 47 crores this quarter as compared to 20 crores last quarter. This is a significant jump in R&D spends, which really reflects the advancement of all our key programs in global trials and in various stages of clinical development. I would also like to take this opportunity of saying that Biocon certainly has one of the largest portfolios of biosimilars in the clinic across the globe. So this puts us in a very strong position in terms of our biosimilar strategy. I would then like to move on to say that Biocon continues to invest in uniquely differentiated products. Our branded formulations has also done extremely well. We are now rationalizing our product portfolio and our segmentation offerings to make us into a very focused specialty company in branded formulations. This exercise actually is paying us rich dividends because although we are seeing muted growth in terms of top line, we are certainly seeing a very encouraging spurt in profitability of our branded formulations business, and this obviously is now contributing to our group profitability in a much more significant way. We have, of course, this quarter made a very big announcement, which is a much anticipated announcement of taking our research services business Syngene to the market. Yesterday the board basically gave consent to management to initiate the IPO process. So we will start that process. The plan is to make a sale of offer of between 10 to 15% of Biocon's shareholding in Syngene, so that we unlock value for Biocon and enable us to fund some of our R&D programs and our CapEx requirements, which are required to back some of these very important programs. And this, we believe, is going to be a very important opportunity, not only for Biocon to unlock value, but I think for Syngene now to really now take off as a very successful research services enterprise. Syngene, as you know, is India's leading research services company, and taking it to the market also will bring in focus on the important opportunity that research services provide to the Indian economy. And I think there is no doubt that the Innovate in India strategy that Prime Minister Modi talks about certainly resonates well in terms of research services that India can provide in a very value-added and cost-effective manner to its global clients. In terms of our Q15 revenue growth, the biopharma business, of course, continues to do well, although the growth is marginal on account of capacity constraints, but we are basically looking into unlocking various capacity constraints, and there is likely to see a small improvement in many of these key areas. We are again rationalizing some of our products so that we focus on some of our high margin products like immunosuppressants and other specialty products. Our Middle East market continues to challenge us. There are huge credit risks, and we are basically shifting some of our products which are very lucrative in the Middle East markets to some other markets, but these are very dependent on regulatory approvals. So I'm pleased to say that we expect some of these regulatory approvals to kick in over the next few quarters, which will then ease our dependence on Middle East markets for many of our key products, especially in the biologics area, especially the insulin area. So it is likely to see a rebound in the coming quarters once we get these regulatory approvals, and once, of course, the Malaysia facility kicks in later or next fiscal. I think you are likely to see a good performance of the insulins business. All our clinical programs are advancing extremely well. In terms of novel programs, I think we're doing very well. It's giving us some good promising early leads. Our oral insulin program continues to basically make a lot of progress in the clinic in the US, and we expect some early readouts by the end of this fiscal, following which, of course, it will mean that the path ahead will then unveil the kind of prospects that this molecule has. It is very exciting, and we are really focused on making a success of this asset. Overall, I would say that the business is running robustly. I think we are very uniquely positioned to be a very, very strongly focused biosimilar and biologics company. I think we have again shown that we are very focused on ensuring that we have good financial sustainability in all that we do, and I'm very optimistic about not only how the company performs by the end of this fiscal, but of course in the fiscals ahead. I'm very confident that Biocon's business model will deliver very strongly in terms of all our programs. So I will end there, and I'm prepared to take question and answers.